Good day, guys. Welcome to Forex Walker. Welcome to episode 64. Now, on this episode, I'll be talking to you about event trading systems that I have. Now, event trading and what I call hedge inflation is the same thing because you trade based on the FOMCs or the uh, central bank economic reports, what those people are about to be saying, or so what we do is that we anticipate what they will do based on their stance. Sometimes they have hawkish stance. Sometimes you hear statements like they have dovish stance and all of that. I will be talking to you about those stunts in this episode. So this is the economic reports. This is the previous month. It says Monday, September 2025. This is the Australian dollar. So here they give you the interest rate decisions for the month of September. So the interest rate decisions were held in this were held. So when you see an interest rate cut is when you have three. I hope you can see the apron. It says 3.85% of interest rates held or on the July 8th, 2025. And here you when it drops like that, it's an interest rate cut from 3.85 all the way down to 3.6, which is 25 basis points interest rate cut that was introduced. So here it says the 12th of August 2025. So at the moment we are in August, and it says on the 30th of September they held their interest rates, and we're still waiting for another interest rate cut. So let's look into this and see how these things work. Remember, we call it event trading systems. So we're still on the previous month, which is September. So let's move down there. We're waiting for RBA. Anything that says RBA, whether it's a press conference or anything. Let's go down there and look for the RBA. This is chart plaque, and but this is too soon because we're still at the beginning. Let's look for another RBA. It's a financial stability preview on the 1st of October. They say the Reserve Bank of Australia kept its cash rate unchanged at 3.6%. Let's move backwards again. And we need to keep reading the RBA meeting minutes. So here it says RBA annual report. So RBA means Reserve Bank of Australia. So let's move into what they're saying. So here they say the RBA, or the Reserve Bank of Australia, kept its rates unchanged. There's a lot of things that are written down there because they can tell you that. Okay, let's read this. It says in line with they kept them unchanged at its September 2025 meeting, in line with market expectations and following a 25 basis points interest rate cut in August. So we're at the moment in September, and here they tell you what they're expecting to do in the future. They're telling you what they did in the past, and so you can read this whole thing. But in this video, I'm not gonna read it for you. So we are, let's go down there. October the 1st, we read what those people are saying. Let's keep moving all the way down there. The annual report is on the 7th. We read this. These are here it says RBA block speech, RBA can't speech. Now, what you need to do, the difference between or the Reserve Bank of Australia and the Reserve Bank of Britain, Bank of England, what happens is that in the Bank of England they vote. So you see those votes that are being made. Some of they have in Britain they have nine MPs who are voting for interest rates, whether they keep them unchanged or they hike interest rates or they cut interest rates. So here, what you can do is that because those guys are voting in Britain, some of them go against with some of them are neutral. So here in England, in the RBA, what you need to do is that you need to listen to the speeches and hear what those MPs are doing, and as individuals, what they want to do, what they expect, and you can listen to separate MPs, and gathering from what they're saying, you can anticipate whether the Reserve Bank will cut rates or hold interest rates or hike, depending on what they're saying. So most of the time, when you read, they tell you that they're having hawkish stance, bearish stance. Most of the time, they use uh, those bond auctions, and before and after that, you get a speech. So yeah, you can just read or study what those bond auctions are doing and how they affect uh, the movements of the currencies. So here, this is a bulletin. A bulletin is just the same as a report to the press. So this it says the 23rd of October. Let's just read this bulletin and hear what it says. So it says the Reserve Bank of Australia kept its rates unchanged. Remember, we are now on the 23rd of October. It kept its cash rate unchanged, and it continues to say whatever it says. But what is important is that when a Reserve Bank says they're keeping their interest rates unchanged, it is what we call hawkish stance. When you hold interest rates, that means the currency is doing well, and the currency will go bullish. But when they cut interest rates, those are bearish stance, and the currency will continue to collapse. So these are event trading systems that we're looking into, and this is how this trade was taken. It was taken on the 17th of October 2025, after which we read all of those those are Reserve Bank bulletins telling us whatever they're telling. So what happens is that when they keep telling you the same thing over a long period of time, you can see that the investors here were trying to anticipate what will happen in the future. So what happened is that the market starts moving sideways. The investors are not willing to either buy or sell. So that's where you get an equal number of buyers and sellers. That's the reason why you have this market moving sideways. And at the end, uh, let me just say before the interest rate reports, let's say, let's move back a little bit. I want to show you something. I think it might be let's go. Let's see. We're waiting for after the speeches. We're waiting for an RBA interest rate decision. So before it comes, we're expecting our intentions are to enter the market ahead of the interest rate report. Let's say the interest rate decisions are next week. So what we do is that we enter the market this week. That's well, we enter the market based on the speeches and the reports that were held in the same place in the form of hawkish stance or the holding of interest rates. Then we know that in in anticipated interest rate reports, we're expecting the RBA to maintain their interest rates, which happened, and because of that, we held the interest rates ahead of the economic the of the interest rate decisions. I apologize for that. So that's how we're able to hold these trades, and this may be a long term trade because I've been looking into this, but I don't believe it will take that long. But because on the fourth term, the Australian dollar is expecting bullish economic reports, that's the reason why I'm looking at this trade as the last test of the previous shoulder, and we're expecting this market to actually keep pushing higher and higher. So these are event trading systems. Uh, but from my side, from my point of view, at the moment, I would rather buy the Australian dollar with the Japanese yen for now, and leave the CHF out of the picture. And because the CHF is not yet pricing in those bullish economic reports, the interest rates on the CHF are actually at 0%, and I'll be looking forward to what those guys will do. I don't believe they will bring the interest rates into the negatives for Switzerland, but we'll see what they do. But for now, this is the trade that will actually take us into January. So that's how you end up holding these trades. And talking about Wyckoff schematics and or those who trade order blocks, what the Wyckoff schematics are telling you is that they they buy a currency when it breaks the previous shoulder or the previous low. So that's how I view the Wyckoff schematics. And remember, guys, I told you that these commodity currencies are going to go bullish towards the closure of the year, both in the southern hemisphere and in the northern hemisphere. In the southern hemisphere towards December, and in the northern hemisphere that will be from March, April, all the way to June, like April to June. That is how they go bullish. So in this case, I believe this is the only time that you can hold this trade. It will go bullish for some time, uh, based on the let's say the currency fundamentally is not bullish, but because of the hawkish stance in the Reserve Bank, what they're talking about and their intentions of holding interest rates which are bullish or hawkish stance, the hedge funds are going to come in and buy the currency. So once you see a currency not listening to macroeconomic reports, you need to know that that is an event trading system taking over, or the hedge funds are actually buying the currency based on what is being said in the Reserve Bank. So thank you guys. I'll see you on the next episode. Goodbye.